Hello and a very warm welcome. Thank you for joining us for episode number 22 of the Money Side Up podcast. The podcast covering all things money for Australians all over the world. Everything from buying and renting property around the world to contributing to super to how to relocate your pets. We've got it covered on this podcast. I'm Jarrad Brown, based here in sunny Singapore, just coming off the back of the F1 weekend here. And joining me today is my friend and colleague, Joel, in sunny Perth. G'day, Joel.
It is good to be back, Jarrad. 22 episodes already, my goodness.
Creeps up on you, certainly does.
Absolutely. Now, before we dive into today's episode, we've got some great content coming up, but just a little bit of a message to keep our lawyers happy. Just note that anything we talk about in the podcast is general in nature, and it is for your entertainment purposes. Of course, both Jarrad and I are licensed financial advisors, and if you do need personal financial advice or would like to discuss how anything that we discuss in the podcast is going to impact you, please reach out to us directly and we can give you advice appropriately. So yeah, Jarrad, obviously just jumping into the sort of general chat, RBA rate cut came through for August.
Yeah, look, I guess that one was probably widely expected and, welcome news, a 0.25% rate cut. I'm sure there were many that were hoping it was going to be a larger one, but it definitely feels like, and I mean, we saw this in the latest commentary released following the 1st of October meeting. The RBA is being very cautious. Some might argue asleep at the wheel. Obviously, time will tell if that's true or not. But I think they're certainly appearing to be very cautious around cutting too quickly. I guess they've seen what's happened in other countries. Inflation spiked on the back of, rate cuts happening too aggressively. Our housing affordability crisis, as it's so commonly called these days, is, front page of every news publication. So, I'm sure the RBA wants to avoid throwing, any additional fuel, I guess, on that fire and cutting rates too aggressively. But yeah, I mean, I guess good news if you're a mortgage holder, bad news if you've got money sitting in a term deposit.
Absolutely. I did see interesting commentary from Michelle Bullock, and she said she doesn't obviously have anything to do with the house pricing. She is only systematically economic policy, but probably looking forward, even just reading the bank's forecasts, I think most of them have said there'll be another couple of cuts. I think NAB being the most conservative one, which said that it will happen, but it will happen later. So then every other one. So I suppose time will tell.
Absolutely. And I mean, I think if you look back at, most forecasts, have the banks ever really got it right? The direction they're pretty consistent with. So, if you're going to take anything away from bank forecasts, take the direction. And I don't think there's too many people out there suggesting rates are going to go up. That'd have to be a pretty outlandish scenario to really see that one playing out. Yeah, chances are rates are going to go down. But at the same time, as we always tell our clients, if you can't afford, the property or the business or whatever you're looking at debt to do at the current rates, and I would, even argue to stress test that at higher rates, then you really shouldn't be doing it. We're really not at ridiculously high long-term rates at these current levels. And there is a scenario where there are no more rate cuts. This is it. And if you can't afford it today, then don't go and do it.
Yeah, you're bang on there. And also then I suppose flipping over to the US as well, I suppose Donald Trump, if he had his way, he'd want rates to be at 0 again. Mm-hmm. But yeah, we did see a cut there in September. Which, pushed rates to probably the lowest it has been since 2022. Mm. Have you heard any other news on the ground there, particularly in Singapore with, how that's sort of transpiring out?
No, look, I mean, I think that rate cut, was definitely welcome news. The cash rate in the US is still, 4 to 4.25%. So, still well and truly above where we're trading in Australia. And I think a lot of central banks have been very mindful, both the RBA and the Federal Reserve, of having, I guess, enough firepower. If it's the next COVID or it's the next economic crisis or some sort of conflict-led economic instability, that they would have enough firepower, I guess, to be able to really slash rates. And when you're at 4 or, you're at 3.6 in Australia, that's a lot of rate cuts that you've got, now well and truly in the tool belt for later on. So, obviously it's having a little bit of an impact on the dollar, and, the strength there. And I think the relative movement of different central banks will continue to kind of see that play out. But yeah, I mean, as you say, it's the politicization of economic data in the US is becoming a little bit comical. We've always joked about how much you could trust data coming out of China based on how the various provinces sort of form data and economic incentives are tied to various outcomes. Well, self-preservation in terms of keeping your job in the United States starts being driven by what data you're publishing, then, at what point do we really need to start to call into question, the data that gets released in the US?
Yeah, absolutely. I suppose it's very much will remain a constant watch this space as, even the politics of the US tends to be very sporadic and there's volatile at best. So I suppose time will tell what happens with, the longer term plans for monetary policy coming out of the US as well. And I suppose another good talking point as well, what we're starting to see, it's probably much more better for me, the Aussie dollar starting to get stronger again. So, for the Aussies heading abroad and wanting to go on holidays, that makes it a little bit more appealing when we have to spend less dollars in foreign currencies, but probably not so favorable for you, Jarrad, if you're, or our expat listeners, if they're starting to wanting to continue to transfer cash back to Australian dollars. It might mean a little bit more money leaves your pocket to do things like topping up super contributions or paying down mortgages here in Australia.
Absolutely. And, how quietly these changes can quickly creep up on you. And I think, one of the things we tell a lot of our expats, especially, whether they're in Singapore or Hong Kong, is just zoom out and understand, where we really are in the rate cycle. A lot of people move to Singapore, they move to Hong Kong, and all of a sudden they're a foreign exchange expert. And, it was 121 last week and now it's 117. So, I'm not transferring $1 back until it's $1.19 for some arbitrary, nonsensical reason that makes sense to nobody but yourself. And even then it's questionable. When in reality, if we just zoom out, I moved to Singapore, we were 84, 85 cents in the other direction. Even today we're a 30, 35%, difference from those days. And that's, 12, 13 years. So, sometimes I think we need to just zoom out, consider what we're actually trying to do, stop worrying about the 1 or 2 cents and just take advantage of an opportunity, while it's there. Yes, it's a bit annoying to, go back to Australia and, if you're buying a house or you're contributing to super or you're just trying to go out for a meal or have a decent coffee, it's going to cost you a little bit more than it did 2 weeks ago. But, $1.17 looks a whole lot better than 85 cents.
Yeah, absolutely.
So, sometimes just take advantage of the opportunities as they lie.
Absolutely. And I think it's just really a timely reminder, just going back to sort of financial planning principles here is to have that long-term view. Understand that, yes, you might lose 1 or 2 cents on your FX exchange every now and then. But, if that capital is coming back and being productive when it's back here, there's a sort of longer term goal or return objective there that can be met, that, that sort of FX, FX difference can be made up. So yeah, that's obviously just part and parcel of becoming an expat. While you're on homes, I suppose another update that we had was the first home guarantee that launched on the 1st of October. We're now sort of 6 days into it. This, is part of the Australian government's terms to get more people into homes and houses. This is obviously a great opportunity for a lot of Australians to start, because they essentially only need a 5% deposit because the Australian government guarantees the remainder of the 15%. So you don't pay LMI. So, and with the updated scheme, there was no income limits. They all got scrapped. So that's great. If you could be, there sort of is no real reason now, no matter what income you're earning in Australia, that, to save 5%, it's a great win. And then as well, the government also increased the price caps on this. So, in Sydney, probably the country's most expensive city, you can buy a home up to 1.5 million with that 5% guarantee. Brisbane's up to $1 million and Melbourne's just shy of $1 million at 950. So, and most, of course, this is, again, great opportunities. But Jarrad, I suppose from an outsider's perspective, how do you see this working potentially for expats and future returning residents?
Yeah, look, I mean, I think it's definitely something people should be, whether taking advantage of or at the very least assessing whether they can. It's probably one of the best programs that we've seen in a very long time. And, we get asked by particularly a lot of our Australian expat clients, and I've written about this a number of times, how will our kids afford to get into the property market? And the reality is they won't. This pipe dream of you need to own your own home and it's a great Australian dream and blah, blah, blah. And it's got to be, on the beach or in the western suburbs or the eastern suburbs. It's just not going to happen anymore. And, we will go the way of every developed city. We're not going to suddenly see incomes, multiply by 3 or 4 times because we don't have the corporate tax framework to support that. And we're not going to see house prices plummet either because we're not building enough of them and immigration is not going to stop. So, yeah, we should be, paying serious attention to whether, particularly if you're a first-home buyer, you're looking at your options, then, yes, start paying some serious attention to what this looks like. Whether you can get on board because we are already seeing prices lift. And this is not going to stop. And yes, surprise, it will be up to the price caps. And despite the government's ridiculous promises that this will have little to no impact on property prices, that is complete and utter garbage. It's already being shown to have impact on prices. And those price, increases are very unlikely to reverse. So if you're a first-time buyer, you're an expat with children thinking about this, then yes, I would be giving it some serious thought as to, what you can potentially do with this guarantee and what it looks like. The other, I guess, just sort of couple of things to flag here with this one. 2 things we've been asked in the past. One is, does it have a reset? And the good news is, yes, it does. So what that means is that if you haven't owned property in Australia for the last 10 years, at any point in the last 10 years, you could be eligible for this program. So if you bought something 15 years ago that you sold a few years after that, you can still look to apply for this. The other big one is, no, you cannot use it to flip straight into an investment property. It needs to be genuinely your main residence whilst the guarantee is in place. And what that translates to is, whilst your loan to value ratio is below 80%, then you must live in the property, and quite genuinely. So that's not just, trick the ATO or trick the government and redirect your mail. That's you genuinely living there. Once the value increases or you've got some additional cash to tip in and your equity or your loan to value ratio can dip below 80%, you can then seek to remove that guarantee, convert it into an investment if you wish, move overseas, whatever your plans may entail. But then you can start to look at your options. So again, another potentially quite powerful tool.
And then I suppose our the sort of final update point is, as we come into the sort of final quarter of 2025, we're also seeing some HEX changes. So these are going to be reflecting part of the Labor government's policy was for a 20% reduction in HEX debt. So you should start to see those reflected in both November and December this year. So that's a welcome news to those who still have HEX or HELP debt. And, this is just sort of all pointing towards, what I see of it anyway is the Australian government saying, right, they sort of understand the younger generation probably have it the hardest of all of us. And probably it has always historically been that way, forever and a day. Young people are always going to have more financial stresses in life. But, a 20% reduction in HEX debt is a helpful way to obviously take a little bit of that load off. we've got a fantastic guest coming on the show today. We've got Berrin Ongun from Shepherd Asia in Hong Kong. Hong Kong's a fantastic market to be in. We see a lot of expats moving in and out of Hong Kong. There's been it's been very topical for a long time, what the change in the Hong Kong market has really looks like. But overall, I can definitely attest that Hong Kong still remains one of my favorite cities, and it's still very much alive and well. And Berrin is, at a very good place to provide advice on setting up businesses, what this means to relocate to Hong Kong. How can you restructure and have everything set up in Hong Kong to make it a roaring success?
So absolutely thrilled to have Hong Kong's accounting, bookkeeping, company secretary, corporate tax expert, Berrin, joining us with Shepherd Asia today. Thank you very much for joining us, Berrin.
Well, thank you, and good morning to you guys.
We commonly get questions from so many expats, Aussie expats all over the world around, is Hong Kong the right place to set up business? Is it an advantageous place to set up business? How does it all work? What do Australian business owners really need to know if they're thinking of expanding into Asia? So we're going to dive into a lot today. Berrin's been in Hong Kong a long time, certainly our go-to expert with everything we need to know around operating businesses in Hong Kong for clients needing to understand tax and everything else. So plenty we are going to cover. So we might dive straight in. Berrin, maybe just tell us a little bit about yourself, your background, and how you kind of got into the role that you're in now.
Well, I'm going to turn this around on you, actually. You moved to a new country as an adult, right? You moved from Australia to Singapore, and I moved from Germany to Hong Kong. And I feel like when you move to a new country, it's a little bit like being a teenager again. It's very exciting. There's a lot of new opportunities. But at the same time, you also don't know how to do a lot of very basic tasks, like how do I find a place to live? How do I get an internet service provider? And I feel like running a business in a new place is very similar. There's a lot of exciting new opportunities that you want to take advantage of. But at the same time, there is so much you don't know, which can end up costing you a lot of time, money, and also a little bit that excitement if you get stuck in a admin or a legal mess. So that's really why I started Shepherd Asia, because I moved to Hong Kong around 11 years ago now. And so seeing that in my previous experience, how that would kind of impact foreign business owners coming to Hong Kong, that really made me want to support them on their journey as well.
Fantastic. And I imagine you'd be working with quite a diverse range of people from, your sort of small to medium and potentially even large businesses throughout Hong Kong and the region. What sort of motivated you, I guess, to continue sort of working with foreign business owners and, operate in the niche that you do?
Well, I think it's just fun to support somebody on a journey that you've been on. I've come to Hong Kong. I've seen how difficult it can be, while it's also fun and all of that, but it's challenging sometimes. So I think it makes sense to kind of serve the market where you've gone through the same thing. And in terms of the industry, we're very agnostic. We have SFC licensed clients, so that's financial services business, but we also serve consulting, trading, all sorts of industry. What they do all have in common is that they're SMEs, either with headquarters overseas or kind of foreign business owners who want to move to Hong Kong and kind of expand their businesses here. That's kind of, I think, where we add the most value, and that's also the most fun.
So it's obviously so interesting, and you're probably right in so many points that you just made earlier. Moving to a different country as a teenager is such a good analogy. We work with expats all over the world, and they come to us, either they've just moved and they're like, I have no idea what I'm doing, or some are like, oh, I'm going to move here. Can you please try and help me? And there's a lot of lean on very specialist people such as yourself. So it's it's just such a good interaction to have. Now, I suppose just taking sort of the softer parts away, what do you find as sort of being the common structures that people move to Hong Kong and set up with? And, are they just purely entrepreneurial, or what sort of other business structures do you find is probably the most common way of setting up a business in Hong Kong?
I'd say 99% of people incorporate a limited company, and that's also what makes sense for them. There's very few circumstances where I would not recommend setting up a limited company. You can act, as a sole proprietor or in a partnership. But limited companies here are so easy to set up and to maintain that it really doesn't make sense not to take advantage of that. So most people, I'd say, go for the limited company.
And is there like what would be the alternative if there was an alternative to limited companies?
There's sole proprietorships where you kind of do business in your own name. There are partnerships where multiple people come together, but there's no separation between their assets and the business asset. And then you have private limited companies where you have that separation. There are some more obscure forms, I would say, like company limited by guarantee, but those are really for specific circumstances. So say if you want to run a charity, you would set that up as a company limited by guarantee, but it's quite uncommon compared to just a regular old fashioned limited company.
Sure. And I suppose, Berrin, for, a lot of our listeners, we've got, people all around the world that sort of listen into this podcast. So a lot of people here may not be completely familiar with Hong Kong as a country. So, is there anything that I suppose you could draw on from your experience that just sort of highlights, what's the biggest draw card for example, Australian businesses looking to set up a business in Hong Kong? Why would you do it?
Sure. Well, China is the major trading partner of Australia, and I actually just looked that up, and it's by a long shot too. So being in Hong Kong, you have the physical proximity, but also the kind of the legal special status that we enjoy, where we are close to China. There's a lot of business infrastructure between China and Hong Kong, but our system is much simpler. So you can take advantage of the simple tax structure, simple corporate structures to kind of go across the border and either sell to China, or a lot of companies obviously still produce in China or buy from China. So that's really where it makes a lot of sense. But also our local market here as well, for certain markets, makes sense to set up here. A lot of people do it as kind of like their Asia headquarters, because again, it really makes sense for tax purposes to kind of have a hub within Asia. Hong Kong is a great place to do that. And I think one thing that's Australians will appreciate is that it's an English-speaking country, certainly in a professional context. Maybe not if you're on the street, you'll meet some people who don't have perfect English, but in a business context, everybody speaks English. So that also removes a lot of the barrier to entry.
It's a really good point. And you sort of touched on what will be very topical to most of our listeners, tax. Obviously, tax in Hong Kong is much more attractive than Australia. And as we go through, various announcements, various headlines in Australia at the moment, it's likely there will be more punitive tax changes on the horizon potentially. Now, for somebody, and we met a lot of these on a sort of fairly regular basis, they might be running a business in Australia, and perhaps they're just sick of paying tax in Australia. They may not be doing a lot of business in Asia, but they're thinking, I'd be sort of quite happy to go and pay tax in Hong Kong if that's a possibility. And then, of course, we have those that might be doing business, in China, might have clients throughout the region. Where does somebody sort of start as to whether this is going to be a good decision? What are those sort of first few steps for an Aussie business owner to start thinking about when it comes to whether Hong Kong is going to be a sensible place to incorporate?
Well, after listening to our podcast, I think people should look at Invest Hong Kong. So they're a government agency, and their whole mission is to bring Hong Kong to the world and educate the masses, about all that we have to offer. And honestly, they're really great. So they really take your time with you, and they ask about your business. They tell you what government grants are out there, for a specific industry, what service providers you can talk to. So I think that's really step one. If the driving factor is taxes, you should definitely get a tax advice. I think a lot of people get tempted, especially business owners. They kind of want to DIY it, which I cannot recommend, because I think there is so much nuance and legalese that we read as one meaning, but in the eyes of the law have a totally different meaning. So it's worth it if you do want to take advantage of the tax system here, which can save you a lot of money. It does make sense to do that upfront investment and invest in a tax advisor in Australia and Hong Kong to make sure that the strategy is foolproof, waterproof, and you won't get into any situation later on. So I think those are my step one. Step two. Step three would be to visit Hong Kong just to see some people in your industry. I think it's only about a 9-hour flight, which Joel recently told me is a quick trip for you guys. So, come over, speak to some people and see what's the trends in your industry in Hong Kong, for example. I think that makes sense.
Excellent point. And yeah, I mean, I think, we see the DIYers even getting things wrong in Australia when they've grown up in Australia, born in Australia, and still making stupid mistakes. So, certainly investing in, professional team of advisors, both in Australia and overseas is just hugely important. And could you maybe walk us through, what does it actually look like to incorporate? So let's say business owner in Australia has decided, yep, you know what, this makes sense. Listen to this great podcast, traveled there, met the people. It all makes a lot of sense. What do we actually need to do to incorporate in Hong Kong?
Right. So the first thing you need to do is, assuming we're speaking about the limited company, is decide on your structure. So there's a few like mandatory positions. The first one being you need to have a resident company secretary and registered office. So that's typically a service provider like ourselves. Then you need to think about who are going to be the owners and the directors. And one advice I would have is, if you have co-founders, don't just give everybody equal shares. Maybe use a tool. There's different tools out there, like Founders Pie is one that I'm familiar with, where you can assign value of what everybody brings into the business. Some people may work in the business day to day. Some people may bring money and the initial capital. So it lets you assign a value to all of these things and split up the shares in a manner that ends up more fair. I think usually it sounds super fair to say everybody gets half, but in the end, people bring different things to the table that should be valued differently. And it also makes the decision making in the company much easier. You do have multiple founders. It's not legally required, but I always suggest doing a shareholder agreement, because the regular limited company in Hong Kong, if you take like the basic template, it's not really made for dispute resolution. So it works great if you're the sole owner, or if there's no dispute ever, it's perfect. But if there is a disagreement down the line, which can happen to anyone, it doesn't have a great resolution to resolve that. So that's why I always suggest, consider seeing a lawyer about it. And then think about how much capital you want to pay. There's no minimal requirement legally. There's certain situations where you want to pay maybe a little bit more if you want to do a visa, or if your industry has like a higher requirement. And then the process itself is pretty straightforward. You engage us, we prepare some paperwork, you sign it, and we submit it. And that's your company.
Berrin, you mentioned just previously, you can act as sort of a company secretary or registered office for businesses setting up in Hong Kong. I suppose this is a bit of an opportunity to talk about yourself there, but what does that sort of look like? What does the role that sort of Shepherd Asia plays in that sort of process?
I think the name company secretary is so misleading, because it kind of gives this image of like making coffee or like arranging calls or something like that. But that is a legal term. The legal role of the company secretary is to make sure all your corporate paperwork is in order, like your statutory file, your annual filings to the government are done properly, and like your company kit, all those like share certificate, all that sort of thing is like handled properly. And the registered office is just like your main address where all the tax returns are sent. If somebody were to sue you, they would have to serve you at the registered office. Let's say broadly in Hong Kong, we have two types of corporate service providers offering that service. One is a high volume, low margin model. So they have a lot of clients and they focus more on the execution. Like you tell them what you want and they do it. And then we have more maybe the white glove approach, which is where I would say we would fall under. So to give you the difference, I think they both have their place. If you're already in Hong Kong and you know what is required and what you're doing, go with the cheaper option, obviously. But I think if it's your first time in Hong Kong, it pays to be with somebody who can give you some pointers. Yesterday, I was speaking with somebody who we are onboarding, and she incorporated her company with a lower margin provider. She's the sole director and the sole shareholder of her company, which is totally fine. But what I suggest is, well, what happens if something tragically happens to you, you pass away? She's a single mom, so she has her kids to think about. What we can do is appoint a reserve director. So that's somebody who has no role in the company unless you pass away. And then that person will be able to help in the transition, and you'll be able to access your heirs will be able to access your bank accounts and kind of continue the business much easier. So I'd say that's the kind of difference, and you need to think about what's important to you and go from there.
No, definitely. And is there, I suppose, any other sort of auxiliary services that you sort of look at or assist with, like, for example, opening corporate bank accounts, are there any sort of particular challenges that you find with like foreigners, or is there any certain nationalities that is sort of more difficult in regards to that sort of setup structure?
Sure. I would say bank accounts are difficult in Hong Kong, certainly for some nationalities more so than others. Australian passports are easy, I would say. You don't have to worry about that. I think generally it is difficult and time consuming to open a bank account. So what we do is we look at our clients and we suggest one or two banks, based on the industry, how much turnover, how much balance, the transaction flow, we kind of know. This relationship manager at that bank, he's going to be able to help with this one, but maybe not with like another case. And we kind of prepare like an application pack, almost like a resume, like this is the company, this is why they'll make a great client. And I'd say generally there's no issue with being a foreigner. It does help to be a Hong Kong resident, if you were to move here and get a ID card, that makes things a lot easier. But it's not a KO criterion. It's just the more risk factors you add for a bank, the less easy it is to open the bank account. And being like a foreign national without residency in Hong Kong, that's one risk factor. It's not the end, but it does make things a little bit more difficult. You should keep in mind, you have to come to Hong Kong at least one time to meet your banker. There is no way around that. So definitely plan at least that one trip to Hong Kong.
Now, we've mentioned tax a few times, Berrin, and I guess that for those who are not already aware, maybe can you walk us through what the actual tax rates are in Hong Kong? Why are they attractive? We know
Gladly.
they're pretty ordinary in Australia. So why is Hong Kong so appealing?
So for business owners, I'd say the most common tax that they pay is the profits tax, and that is at a maximum of 16.5%. The first 2 million Hong Kong dollars of profit, that's roughly 400,000 Australian dollars, you only pay half tax on it. So that's just 8.25%. And you can even get certain exemptions from paying tax because we have something called the territorial tax system. So it means you only pay tax on profits that are sourced in Hong Kong. For each type of business, there's like a set of rules. If you do this in Hong Kong, then the business has to pay tax in Hong Kong. But if you don't do it in Hong Kong, then taxable in Hong Kong, which can sometimes be attractive, obviously, on a global strategy. Sometimes it makes sense to actually pay the tax in Hong Kong. If you create more value in Hong Kong versus Australia, then you may want to have more of your profit in Hong Kong, pay more tax here, where I think the tax rate is quite a bit lower than it is in Australia, from what I understand. And crucially, we don't have a lot of taxes that other places have. We don't have VAT or GST. There's no capital gains tax. There's no tax on dividend. So pretty much you just pay tax one time on your profit and you're good.
So step one, move to Hong Kong. Step two, generate
Exactly.
400,000, give or take, Aussie. 8.25%. I said about 34 grand, give or take, on $400,000 tax, and then pay yourself a tax-free dividend. Not advice, of course, just for everyone.
Not advice, correct.
But gee, that's pretty attractive, isn't it? You can certainly understand. And I think, removing the sort of comedy to that, it is incredibly attractive. But I think it also really highlights, just how pro-business Hong Kong is. To be granting the first 2 million Hong Kong, 400,000 Aussie, there are a lot of businesses in Australia that are not making anywhere near 400,000. So that's certainly appealing, particularly for those that are looking to to really grow quite quickly. So I think that's really important to know. Obviously, to achieve these tax rates and comply, I'm assuming we need to file tax returns. We need to make declarations. What does that actually look like for a business owner in Hong Kong? And I guess how do you and the team assist with that?
I think not a lot of people want to know about the mechanics of how their tax return is filed. I think the crucial point is that we try to prepare you for your tax return. You don't receive your first tax return until 18 months after you open your business. So during that time, it's easy to forget that a tax return is coming. So we kind of keep an eye on your deadline and make sure that by the time the tax return arrives, everything is already in place. You've already done everything you need to do, and then you just need to file the tax return. One thing that's quite good from a mathematical perspective, but can also come back to bite you, is that you don't have tax withholding throughout the year, but you do have something called provisional tax. So in your first year of business, you will pay tax on your actual profit from the past year, but also your estimated profit of the coming year. So it's quite a big chunk of money. The following years, that's usually fine because it's kind of a prepayment. It gets applied, but it's usually the first year of business, or if you have a huge jump in your income that you didn't prepay your tax on, where that can kind of hurt. So I think it's a matter of being made aware of this. On day one, you're starting your business today. You don't have to withhold tax, but it may make sense to set aside maybe 10% of your net profit every month to have a healthy buffer that by the time you receive that bill, it's not big deal.
And so obviously tax compliance is, I'm sure, very still, very important for Hong Kong businesses and people like yourself. So what does that sort of audit compliance for tax, sort of look like? Is it
Right. You're mentioning an important word, which is audit. I think what surprises a lot of people, given that everything else is so easy, is that every Hong Kong limited company needs to have their accounts audited every single year. There are no exceptions to this because you need to have this audit report and file it with your taxes. So there is no way of not doing that. That said, there are ways to choose wisely. So you prepare your account. Typically, we do that for our clients. Then we pick an auditor. You get the final choice, but we make a suggestion. If you're obviously a big company and you have certain investors, go with the big four. If you're in certain industries like financial services, you need somebody who can deal with that. But if you have your own business, then you're the only owner, you're just doing this audit for tax filing purposes or company law purposes, just choose like a very reasonably priced local team. And then we liaise with them and we handle all their questions, stuff that they need to ask. You get your audit report and then we prepare your tax return, your tax computation, and you file that. I think one problem in this process is that some people here, you only have to audit your accounts in Hong Kong once a year. And they think that means I only have to do my accounting once a year. And I think that's where you get in trouble because suddenly it's like, oh, I spent $10 last January. My accountant is asking me what that is about. I need to go search for the receipt. That's when it becomes painful. So we always make everybody do their accounts every month. So that way you're always up to date and you don't get into that pressure at the end of the period.
Definitely. And there seems to be this is just of my, let's just say much smaller knowledge than yours, Berrin. It just seems that, the Hong Kong government does want businesses to come to Hong Kong and be successful in Hong Kong. So it just sort of radiates from that particularly as to probably why they're, a little bit more pedantic around the auditing and the accounting side of any sort of the business success. Moving on to sort of something a little bit softer, perhaps employing people in Hong Kong. Is that employing locals, employing foreigners? How does the sort of payroll work? And obviously Hong Kong has MPF, which is Australia's version of superannuation.
Right.
So what does the sort of obligations for businesses, and you're setting up businesses and employing staff? What's the sort of obligations and requirements?
Right. Well, I know you have a lot of people familiar with Singapore where there's a difference between how local employees are treated and what you need to do and then foreign employees. And in Hong Kong, there is no such difference. So anybody who is your employee, you have to do the same very basic things. You have to arrange for their NPF, that's their super. That's capped at 1,500 Hong Kong for your contribution. So that's kind of the major payroll expense that you would have. That's around 300 Australian dollars maximum that you would need to pay per employee. You have to arrange workers' compensation insurance in case somebody gets injured on the job. And you have to make some very basic reports to the Inland Revenue Department, like when somebody's joining you, how much you've paid them each year, then when they're leaving you. But there is no tax withholding. You don't withhold taxes for your employees. There is no other social security, none of that. So pretty much what you advertise as the cost or as the salary, that ends up being your cost with a very minor variation. So it's a very reasonably priced place to hire employees. You can play around with benefits a little bit. I'd say medical insurance is a benefit which is not legally required, but expected, especially the more senior you go for employees. They do expect to have a medical insurance. You can play around with some benefits that don't cost you anything, but save the employee potentially a lot in taxes. So you have some leeway there, but generally I would say it's quite relaxed and easy to find talent here and employ them.
What about bringing people in? So maybe you could step us through some of the visa options for, let's say a business is setting up in Hong Kong from Australia, looking to bring over staff from Australia. What do those visa options actually look like?
Right. I'd say broadly there are 3 types of visa. If you're bringing somebody in that you're employing, that will be an employment visa. And especially for intercompany transfers, there is like a special mechanism where you have to provide less information. Generally, Hong Kong is an easy place to get a visa, an employment visa in particular. There are still certain requirements, and I think people sometimes don't take them seriously, and that can hold you a little bit of a delay. For example, if you're bringing people over and you're applying for a visa, even if it's your first hire, that person is not even in Hong Kong yet, you'll have to have an office. You have to send a picture that there is a desk for this person. Now, a lot of people like to argue because, rent is expensive. Why do I have to do this? They're going to work from home. We're going to rent an office later. That just won't fly. And all that's going to do is you submit the application. They take 4 weeks to look at it and they send you back. You need to rent an office. And now you've wasted 4 weeks. Visas are always urgent. So don't make that mistake. I think another mistake is looking at it from the perspective, we need to hire this person because we need that knowledge in the business. You need to flip it around. What does Hong Kong have to gain from bringing that person in? Well, that person is bringing in specialized knowledge that we don't have in Hong Kong and can train Hong Kong people in this area. That's why you should grant this person a visa. So I think there's just this kind of way of complying with the very few requirements that we do have for employment visas. As long as you do that, it's pretty simple to bring employees over. It's a little bit more difficult as a business owner. You'd have to do an investment visa. And there you do have to show, how are you going to fund this business? Please pay. There's no minimum capital requirement, but you need to show financial projection and how you're going to sustain your business in the meantime. What's your background? Do you have any knowledge to run this business? Do you have the licenses that are required? That sort of thing. Hong Kong is a very adaptive place. Whenever we notice or our government notices, maybe we don't have as much visa applications, post-COVID than we had before. They are very quick to introduce new measures. So there's a few new visa types like the Top Talent Pass scheme. That is honestly a super great way to come to Hong Kong. You just need to meet either an income requirement or have a bachelor's degree from certain top universities, I think around 100, 150. Then you basically get a visa to come to Hong Kong that gives you 2 to 3 years to start your business. And then you only need to prove, okay, we have an existing business here. And top tip, if you can get on a dependent visa, say your spouse can get an employment visa and you can become their dependent, that's the best visa to have. You can do anything you want on a dependent visa. So that's a much quicker and easier way to come to Hong Kong if that's an option for you.
Mm. I think it's a really important one for people to know. Obviously, we've been through quite a number of changes with the dependent passes in Singapore, with a lot more restrictions.
Yeah.
Really no ability to work, which has meant that a lot of families have, had to pack up and go home.
Come back to Hong Kong, actually. I've had a few clients.
Or shift to Hong Kong. Yeah. I think that's a really great option, particularly if you're not quite ready to pay tax in Australia or not quite ready for the weather. Whatever it may be. So I'd certainly be looking to Hong Kong as another potential option. Berrin, you covered some great top tips there. I think that's fantastic for people to be aware of. Obviously, Hong Kong makes a lot of things simple, but it doesn't mean we can sort of overlook the steps that need to be followed. I think that's really important. What about just changing tax a little bit? Sort of financial software. For business owners in Australia, I think, the majority are either using Xero or QuickBooks. Hopefully not too many, pen and paper or Microsoft Excel. Although, Copilot's pretty good these days. Is it similar in Hong Kong? Are there sort of local systems, softwares that people use? What does that look like?
Well, I think Hong Kong in generally is not the most digital forward thing. That's still something that, we need to work on a little bit. So if you go with a local firm, a lot of the time they will use a desktop version. There's local version of accounting software. Sometimes they use QuickBooks Desktop, and then they just send you an Excel report at the end of the period. I think Xero is a great software. It's not perfect, but it gets you 99% of the way there for most clients. And what I like about it is that you as a business owner or your team can go in and do your invoicing throughout the month. And then we can go in and run your report. And you always have most people care about their sales dashboard first and foremost, right? So you always have that in real time if you use like a software. So I would always ask, like if I was looking for an accountant, I would ask them what's the approach. I mean, I prefer the little bit tech forward approach where you use Zero and, you use their app to snap a picture of your expenses, that kind of thing. But some people prefer the old fashioned, I just want to hand you a box. Just ask what your accountant would usually prefer.
I think that box, the idea of
Makes
that
a lot of
box just gives me anxiety. I don't think I've
Me
seen
too.
any paper in years. So yeah, is there, I suppose, anything else that that you do to support sort of businesses, with sort of compliance, IRD? I'm sure if there's any sort of disputes or investigations in the company, is that something that you can help with as well, and just to really help guide
Sure.
businesses?
But I think, the word IRD investigation, that is giving me a heart palpitation.
Yeah.
What's much more common is inquiries. So the way it works in Hong Kong is you file your tax return, it gets read by a computer, and they send you your tax bill. But after that, they have up to 7 years to ask you questions. And they may disallow a deduction if they think you cannot properly support. And we know what kind of deductions they look at in particular. Like we know what inquiries are a business is definitely getting. Like, for example, if you take advantage of this offshore exemption where you don't pay tax in Hong Kong, definitely after 2 to 3 years, they're going to say, all right, show us that you really didn't earn your money in Hong Kong. And that's not something you can create at the time of the inquiry. That is like evidence that you collect over time. So what we really do is tell you in advance, oh, we see you have this type of expense, entertainment expense. Make sure you write down who you are dining with and, what company they work for, so you can support. That's a real business expense. So we try to plan in advance. Then when we do receive that inquiry, it's a simple matter of, just preparing the answer and submitting that to the IRD. Now, for a field audit or investigation, that's really much more applicable to fraud. Like recently, we had a case where somebody had 2 sets of books, the real one, and then the one with the smaller numbers to submit it to the IRD. I would say that's a totally separate issue. And if you are in that situation, you should get like a specialist who deals with that.
And slightly probably more of an ethical dilemma in that.
Yeah.
But we won't go into that too deep. So I suppose just sort of rounding this out, then what could you say is probably the very unique benefits that Hong Kong, apart from that gateway to China, does that whole business ecosystem, just in isolation to sort of the island itself and the tax structure, where's probably top 1 to 5 key points that is just highlighting why
I feel like you
Hong Kong?
mentioned them already. It's just so easy to set up a business here and make that either part of your Asia strategy or global strategy to have a much better, more streamlined, less expensive structure globally. I'd say that's where we really shine.
Excellent. And look, I think you've certainly covered a lot of tips, a lot of insights, a lot of benefits. The tax rates, we knew they were good, but they really blow Australia out of the water. Berrin, is there anything that we haven't mentioned today, you haven't brought up? I guess as if there's an Australian business owner listening in, or maybe they're living somewhere else in the world, thinking, what, I want to go and start my own thing. I'm looking for a friendly hub to do that. Maybe Hong Kong should be on the radar. So, one piece of advice perhaps that we may not have already covered today.
I think my advice would be more general. Don't rush it. It's very easy to set something up here, but I think you should take the time and really think about, if I have a co-founder, how many shares is each person going to get? Sit down and draft a shareholder agreement and do all of these steps in the beginning, because sometimes we get so excited and we want to get started right away that we kind of push it off and it never happens and it comes back to bite you down the line. So I would say, take a couple of weeks to really educate yourself and then make an informed decision afterward.
Fantastic. Well, look, we might wrap up there. We'll obviously publish your details in the notes so people can reach out. Anyone who might be thinking of expanding into Hong Kong, questions about an existing business in Hong Kong, or maybe they're in that difficult situation where they are handing over the box of receipts to their accountant, thinking surely there's got to be a better way. So please do reach out to Berrin and find out what that better, more streamlined solution is. But very hugely grateful for you giving us your time today. Certainly lots of helpful insights to everyone listening. And I'm sure everyone will get a lot of value out of that today. But thank you very much.
Thank you guys, and have a nice day.
As mentioned in the first episode of our podcast, we'll be releasing this podcast each month on the last Wednesday of the month. We'll be interviewing an expert each month on topics ranging from, renting a house in Singapore, buying property in Australia as an expat. The list goes on. This podcast is available on all major hosting services, so you'll be able to find us, subscribe, and check out any resources that we're creating as part of this podcast. And of course, please leave us with your questions or any feedback or commentary. If there's any sort of topics that you're wanting to hear about, we would love to hear from you. We would love to hear your feedback, and so we can continue to create lots of content that is exciting for our listeners. And thank you so much for subscribing already.
Thanks, Joel. And obviously, if you have any topics or things you'd like to hear about, questions that we haven't yet covered, drop us a note on the socials. We are at MoneySideUp across most social channels: Facebook, LinkedIn, Twitter, X, Instagram. Yes, certainly hit us up with anything you'd like us to cover on future episodes. If this is of value to you and you are finding it useful, please do leave us a 5-star review. We're always grateful. And of course, let someone else know about the podcast who you think might benefit from listening to us as well. We've got a great speaker lined up for our next month's podcast, so don't miss that one. Stay tuned. But thank you very much for tuning in, and we look forward to speaking to you in the next one.
Thank you all.